CNBC TV18, embarking on a quarter century of excellence.
Welcome back. You're tuned into Barsad Morning Call and hope you're having a good morning. Well, for starters, you have the gift nifty that's suggesting we open up well in the green. But we have listed down all the stocks for you, so let's get some fundamental analysis going. Amnish Aggarwal, Head of Research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Morning. Always good to see you in. Well, the gift nifty is suggesting we're going to open up in the green, but it won't be getting much support from the IT names because Infosys will be a bit of a drag owing to the, the rejig at the top with regard to their CFO moving on. What's your view on the stock? If Infosys pulls back, will you look at it as a buying opportunity?
Yeah, good morning. You see, the main thing is that whether you can say CFO moving out or these are all, you can say, corporate actions and which have impact more like you can say a day or two unless and until it is something very big and structural. So I don't think that it is going to be structural, and IT stocks which have been underperforming, say, from quite some time, I think one should be accumulating them on any decline.
Okay. Amnish, hi, good morning and thanks for joining in. I wanted your thoughts in general about, the markets. How are you feeling at this point in time? And have you identified any stocks that one can buy despite the, the Nifty being at these levels?
Okay, good morning. The main thing is, you see, we continue to be very constructive on the markets. Now, as far as your these Nifty levels are concerned, I think we still need to look at that the small cap and mid cap indices are outperforming the large caps. And the large cap names, particularly, say, if you look at the indices, banks, they have been grossly, they have not actually made any big move over the last 6 to 12 months. The big, barring CITC, big consumer stocks are, you can say, there. Then your IT names, they have not gone anywhere. Reliance has not given any return. So practically more than, say, half of the Nifty, if you look at. So there is practically no return. And even then the markets are making new highs. So I think and fundamentally some of these sectors, particularly if you look at, say, banks have been doing well over the last, not now, maybe say last year or two. And the entire action there is currently concentrated more on the mid-cap PSU names. So I think if one looks at, say, the indices, if one looks at the large cap names, then the banks definitely, they have got many more legs to go over the, say, 6 to 12 months. But in general, I think the basic themes which are driving the market, they remain the same. The outlook over the next few months, that remains positive. RBI has also increased the GDP forecast. So I think one has to be very stock specific, that one doesn't go into the spaces where there is too much of froth. But I think overall doesn't seem to be in any sort of a danger zone or any sort of a bubble. And I believe that there will be ample opportunities here and there, both in the large caps and mid caps, where one can still put one's money on.
Amnish, hi, good morning. Prashant here. I think around the time of Diwali, you put out a note, and I think you had RR Kabel as one of the ideas in the mid-cap space. Just talk to us about that. I mean, we put out a piece, Nigel did a piece yesterday, how Polycab is now the most valued wire and cable company. It's kind of displaced Havells from the throne. It occupied for so long. But RR Kabel is a large player in Maharashtra. And how is it placed relative to some of the others out there, and valuation-wise, how's it looking?
If you look at, say, first about the Polycab has been a very, you can say, classic stock. Maybe I think 2.5 years back when we initiated, it was just around 1,000 rupees. Now, Polycab has the advantage that it is more or less a pan-India player, strong both in the B2C as well as in the B2B segment, although their success in the FMEG business has been relatively, I would say, limited so far. Now, Polycab, because of the strong demand from the industrial segment, has shown very good numbers, and the market has also re-rated practically all the wire and cable stocks. But having said that, RR Cable now, it's a relatively new company which has got listed, say, 3 months back. Now, advantage RR Cable has got is that the proportion of B2C for RR Cable is higher than any other company in the listed space. So that gives this company an advantage. The second aspect is that the margin profile of RR Cable, where it is operating at say in a band of say 7 to 8%, that leaves a lot of room for expansion, maybe say over by 2 to 300 basis points over the next few years. And the third is the balance sheet is strong. The company has, I think they are going to spend say approximately 200 crores each on capex over the coming few years. So I think it seems to be a very sustainable story. The P multiples are lower than Polycab. I think on our estimates, the stock would be trading at say roughly around 33 times. And I think over the period of say 1 or 2 years, if one invests for medium-term horizon, I think RR Cable is a stock which should get re-rated over the coming 1 or 2 years.
All right, RR Kabel, that's one of the big stocks in there. Amnish, I wanted to ask you about these so-called tier two, second rung in terms of the pecking order. Smaller banks, Bank of India, they came out with a QIP, massive demand. J&K Bank, you have a QIP as well, and we understand that there's very, very strong demand. What's your view on particularly, the frontline banks will do well, but in the near term, would you look at these tier two or, second rung banks, so to call it?
You see, banks always, if you look at, say, not now, but always the banks always move in, you can say, in a group. And now what is currently happening is that the balance sheets of PSU banks are better. Some of the advantages which private sector banks were having historically, so the kind of advantages they have come down both in terms of technology, in terms of balance sheet and all. And some of these PSU banks are also now growing, although their growth rates are lesser than the private sector banks. Now, as we stand today, the gap between the price to book, although the price to book of all the private sector banks has shrunk considerably over the last couple of years, but still they would be trading at say anywhere between 80 to 100% premium to the public sector banks. And when the going is good, their balance sheets are also good. And I think that is the reason why all the public sector banks, they have been doing well. Earlier it was, you can say SBI, Bob, and now you can say the entire second rung banks have also come into play. So I think they will always continue to trade at a discount. When the going is good, the discount may narrow down. So maybe they can, you can say an SBI may go to say 1.3, 1.4, or some of these banks may go to say at maximum say 1 time book. Some of them are trading at 0.5, 0.6 times book as of now. So I think once the rally in these gets, gets further prolonged and they move up, I think after that we will see again re-rating coming for the private sector banks. So till the time some of these banks with good balance sheets, reasonable growth rates, they are available at 0.5, 0.6, 0.7. I think the market will continue to rally some of these stocks.
Okay. Amnish, I wanted your thoughts on Trent because Motilal Oswal has released a very interesting report this morning. They talk about how all their brands are picking up now, right? Whether it's Star Bazaar, whether it's Zudio, Westside, and of course Zudio has done very well for itself in that price point. Do you think this is a multi-year opportunity and investors who've not participated, perhaps, do you think there's more to go here?
What Trent has actually done is that it has been able to create a very strong niche in the mass segment of apparel retail. Now, if you look at the apparel retail, particularly the mass end, then you are having players like, for example, Zudio is one, and then Reliance Trends is another, and many of the, you can say, the traditional departmental store companies, whether these are the likes of Shoppers Stop or Lifestyle or even Pantaloons, they have not been able to grow the way these other two, you can say, other two brands have been able to grow. Now, looking at Trent in particular, I think their Westside as well as Zudio, they are doing well. Zudio particularly has been a very, very interesting story where it has been expanding very fast. The throughput is coming, and the way it has been able to garner the, you can say, the throughput as well as sales from the emerging generation of the, you can say, Generation Z. So that is a very interesting story. So I don't have an exact hang on how the numbers pan out, but definitely Trent, the way it is growing, if it sustains the growth and the momentum, I think this is a stock to watch out for the coming, say, 1 or 2 years.
I mean, and that's a important one. We get lots of questions around this one because it's done so well, and people who owned it kind of sometimes wonder whether they should book some profits and move it to something else. Valuations, of course, etc., very rich here, but the business, Zudio especially, as you said, has done very well. Amnish, thanks for waiting. Just a few more names I wanted to get your reaction because there is so much happening in the market, right? IREDA, is this a classic case of a bit of a euphoria in the market? I think now stocks trading at about 3 times FY25. price to book. Almost there. Limit up 20%. You can kind of draw a straight line to what REC and PFC has done, but this one is more focused on renewables per se. So your thoughts there. And then I just wanted to get a quick word in on GMR infrastructure, which has done very well over the last 2 days. Go on.
Okay, you see, when it comes to your IREDA, this is a classic case when the market is chasing the companies which are focused on the new energy or the renewables. Now, this company is into funding of only renewables, and that's why it, you can say, qualifies to get maybe a higher P multiple or higher price to book value. Now, price to book value of 3, if you compare, for example, it can grow definitely higher, but today, even in the, you can say, the entire NBFC space, you will not find many companies, maybe say a Bajaj Finance or you can say Chola, who are trading at high multiples. All the banks, they are trading at sub 3. So I think this company is actually, it is just the rush to buy something, buy a stock which is into the funding of the renewables, and that is why there is so much of excitement and the stock is moving up. And usually we have seen that when there are certain themes which are being chased, then before the stocks, you can say, reacts or you can say reaches or stabilizes, one can't rule out the euphoria, and that is exactly what is happening with IREDA. So it is purely based on, you can say the market hunt for something which is catering to the renewable or the new energy segment. Now, when it comes
Just 1 minute. If you release a report today on IREDA, would you put a hold, a buy, or a sell? I mean, just hypothetical. With what they
very difficult to say, but in general, I'm not a very big fan of buying. You can say any financial at a very high price to book value.
Okay, got it. GMR Infra, Amnish.
You see, GMR Infra, if you look at the entire aviation space, you look at, say, what is happening in Indigo, what is happening in SpiceJet, or for that matter, the way, you see, India is coming of age. Today, someone asked me that what is happening on the consumption side. You look at, say, even the normal staples are not selling, but you look at the discretionaries, you look what is happening on the aviation. Okay, the way you can say, you will find most of the time, you can say the flights are going packed. The more and more tier 2, tier 3 cities, they are getting, you can say, the airports are being built. So I think aviation sector has come of age. And that is, I think, going to help, you can say, companies like GMR significantly. Because there are, I think it's more like a consolidated market, both on the private space with 2 or 3 players now who are controlling it. And the way the growth looks for India over the next 5 to 10 years, I think the entire aviation space and all the ecosystem around it looks quite exciting, and GMR will definitely be a beneficiary of this.
Okay, so that's on the aviation space. I wanted your thoughts on some of these rate sensitives, right? We spoke about banks, but the other space that has been doing very well is real estate. And we're going to talk to a real estate player now. But in the anticipation of more rate cuts, perhaps in the second half of the new calendar year, would you buy or increase your allocation to any of the real estate stocks?
Because see, real estate stocks have been doing really well, and this is despite the interest rates were moving up. Because I think there are 2 or 3 factors which are playing out over here. First of all, the real estate players, when it comes to the stock market, they are limited to, you can say, the developers. But in the tier 2, tier 3 cities also, there seems to be some sort of a momentum which is building up in real estate, and the prices actually, they have started moving up after a gap of several years. So that is one. Secondly, I believe that as the interest rates they soften up, we will see more demand coming for the building flats or the projects which are developed by some of these real estate companies. But having said that, I think if the economy continues to do well, then the demand for houses, both for both for the second homes, as well as by the new generation, because as against the earlier scenario, the now the new generation, they want to build their homes when they're, say, much younger than what the earlier generation used to be. So I think real estate seems to be, I think, a very dependable story. And having said that, as a sector is coming from the downturn which lasted, say, many years, I think there could be many more legs to growth. I think for the next 2 to 3 years at least, the real estate sector as such should do well in terms of, say, the overall bookings, in terms of the revenues which they are able to book, and overall numbers.
All right, Amnish, I wanted to ask you about Mankind Pharma. No, that was one of the big listings that took place earlier this year. Now, there's news that could probably be a PE that will look to exit a particular quantity. Now, if that happens, it could possibly get included in the MSCI. It's already been included in the FTSE. But given the kind of run-up we have seen post-listing, what's your view on this stock?
We don't have a coverage on Mankind Pharma, but definitely I would say it's not a cheap stock. Okay, and ahead of, you can say, such kind of a stock, your dilutions or sale by the P, there could be some pressure coming in the stock intermittently. But definitely we don't have any firm rating on the stock as of now.
Okay, so from the Pharma pack, what do you like?
The Pharma pack, I think Cipla and Sun are the two stocks which looks to be very good on in the large caps. I think the numbers have been good. These stocks have been gradually inching up. And now Cipla particularly, I think it is consolidating around these levels. It looks good. I think it should good, I would say decent 15-17% return over the coming, say, 12 months or so. In the mid-cap space, we have been very positive on JB, Torrent, as well as your Eris Pharma.